Are you new to tax returns and wondering when you need to do it? Well, in this video, I'll answer exactly that question. As business accountants, my team and I spend all day long helping business owners on their journey. And quite often, a very common question from startups particularly, or people who have never done a tax return before is, when do I have to complete a tax return? What are the deadlines? When do I have to pay my tax? All these kind of questions. Well, in this video, I'm going to talk to you about when you should be submitting your tax return and what other deadlines you need to be aware of. Before I do though, make sure to click the subscribe button below if you enjoy these types of videos to be notified when we release any other ones. So before we get rolling on this, one of the things I think is quite important is there are a lot of things if you're new to self-employment or new to being in business by yourself, maybe you've got a new limited company, and there are loads of things to do. There's loads of videos on the channels that you can go and check out, but if you want it all in one place written, make sure to check out healandassociates.co.uk, our website, and there's a blog there. If you just Google Healand Associates Startup Guide, you'll be able to find it on there, all the topics and links to a load of different blogs and videos that will help you along. But right now, I'm just going to talk to you about the tax returns. So let's start off with a sole trader. So if you're a sole trader and you've got a new business, so we're going to use the word self-employed and sole trader interchangeably. You quite often hear people say, I'm self-employed and they're a limited company. And whilst some people and institutions will treat you as a sole trader, as a self-employed person, as a limited company, say like a mortgage company, if you own most of your own company, they were going to treat you as a self-employed person. They might refer to you as self-employed. Same with Universal Credit, oddly. Sometimes they will, even though you're actually an employee and an owner of your own limited company. But for taxman's point of view, he classes you as employed and owner of your limited company, and any dividend income that you're getting from that company is classed as sort of investment income and dealt with through your tax return. So you might need a tax return as a director and an owner of a limited company, and we'll talk about that in a sec. But right now, let's start with sole trader and self-employed people as the taxman would see it. So if you picture, let's say you're a barber or you're a hairdresser, you're a taxi driver, stereotypically those types of trades, chippies and the like, you know, or if you start off, you're just starting off your side hustle, all these kind of things, you're going to normally start off as a sole trader. Now, the taxman tells you to register as soon as you can for a tax return. And we've done another video on that you should see about here that will take you through that process of how you register and get yourself a tax return. But when you do have to do a tax return, you have to do it by the 31st of January following the end of your year. So let's say, for example, you started in June 2020. Now, I used the word year a minute ago, but this is accounting year. So generally what will happen is if you started in June 2020, the normal thing to do would be to cut off your books at the 5th of April 2021. Now, the reason you do that is it's in line with the tax year. So you're going to get taxed on anything that you earn in that tax year in self-employment. So from June 2020 to the 5th of April. Next year, you then get taxed from the 6th of April to the 5th of April. The following year, you get a full year. So that first year might be a shorter year, but that tends to be better than taking your books to a whole year. So you wouldn't go the 1st of June right around to the 31st of May next year. You could do, but what you'll find, and it's out of the scope of this video, is that things get a lot more complex with the timing of when you pay your tax and everything. It gets very, very messy. You used to see that years ago. Now you don't see it very often. So yeah, so presuming you did June 2020, you'd cut off on the 5th of April 2021 as best practice. Now, what you then have is all the way around to January the 31st, 2022 to submit that tax return. So it gives you like most of the year to figure this out. Now, the reason I would always say to you, don't leave it to the last minute, is that your tax is also due on the 31st or by the 31st of January 2022. So you have got a long space, but don't leave it to the last minute unless you really know where your tax is. Now, the other thing to bear in mind here is that this presumes you're going to do it online. That's how Revenue and Customs would like you to do it, and they give you the max amount of time to do it. You can still currently do it on paper, and that brings that deadline forward to the 31st of October. So if you imagine you've got quite a long time before you have to physically hand over any tax, we're saying that you can start trading on June 2020 in this example and go all the way through to 31st of January 2022 before you have to hand over any tax. That's a crazy amount of time. So just bear in mind that you do need to save some tax, and there's other videos and blogs that we've done on that. So that's as a sole trader. As a director of a limited company, actually so much is dependent on if you've taken any money in dividends. So you don't have to have a tax return as a director. Revenue and Customs used to tell you that was the case, but it was never in line with the law, so they've changed that. But the minute you have some tax to declare, or Revenue and Customs have decided to issue you a tax return, you need to do one. So normally this is because you're going to want, from an efficiency point of view as a limited company, to pay yourself some money in salary and some in dividend. Now, when you do that, you're going to cause yourself a personal tax bill on the dividends. Now, there's lots and lots of reasons why that's efficient. And again, we did various videos on this, but this is the very normal situation. You're going to pay some personal tax. And again, what happens here is your dividends have got dates on them. So you declare them, and that date is the date that you use to go onto your tax return. So you will add up any money you've earned in the tax year. So the tax year runs from the 6th of April one year to the 5th of April the next. So let's presume again that you started going limited in June 2020. You would put on you'd go all the way around and add up any dividends that you'd had all the way through to the 5th of April 2021, and that would go in your 2021 tax return. And again, any tax due is going to be done by the 31st of January 2022. So same deal, you've got loads of time to save this money before you have to part and hand it over. So again, best practice tends to be save as you go to make sure you've always got that money there, but you have got a bit of time if you need that flexibility. So that's there. So yeah, you're just adding up, but the dates are important on this particular instance. And again, what the important point to remember with a limited company is for you in your personal tax return, it's irrelevant what the company year end is. It's all about what dividends are dated inside your personal tax year, and that doesn't move. The company year end might be the 31st of December, but we're still interested in what dividends you had between when you started and the 5th of April, and then the following year, the 6th of April to the 5th of April. If for any other reason you need to complete a tax return, so you might be a personal tax client who's got a rental portfolio, or you've just got a load of money in investments that you're getting money in for and you have to hand over some tax, and therefore the only way to do that is with the tax return. Now, if that's the case, it's the same deadlines. You're going to, as a director that we spoke about, you're going to add up from the 6th of April one year to the 5th of April the next. So 6th of April 2020 all the way around to the 5th of April 2021, for example, you're going to do your 2021 tax return and hand over any tax due by the 31st of January 2022. Again, this all presumes that you're doing this all online, otherwise that deadline comes forward to the 31st of October. And I suppose as a caveat, it's important to remember that these personal tax returns encompasses the majority of your worldwide income. So there are instances of things that aren't taxable, fine, you're going to leave those out, but you've got to think about your worldwide income from all other sources. And again, that's probably something that's outside the scope of this video, but bear in mind you are capturing everything in one kind of bucket. So if you started self-employment or you started limited and you've come out of a job, so as we record in this video, there's a lot of people being made redundant. So you might have a redundancy payment that was taxable, something like holiday pay that was owed to you, something like this. You're going to need that P45 as well, which is the form they give you to tell you what you've earned by the time you left. That all goes into this one big pot. Sometimes that's a good thing because it gives you a rebate. Sometimes it's not a good thing, and actually because of your other earnings it can cause you a tax bill. But either way, you can't really do much about it. You've just got to do what you can. If you're in a limited company, there's a bit of flex around with that, and that's worth talking to your accountant about. But yeah, remember, you're just trying to capture all this information in this bucket, if you like, that is your tax return. So that's the key dates. So as you see, one of the biggest dates is the 31st of January each year. It's just understanding in the early days when that first one's due, and there are a few options. So again, chat to an accountant if you've got any queries, or if you've got any direct queries and don't have an accountant, you can of course hit us up in the comments below and we'll do our best to answer that question for you. If you've enjoyed this video, be sure to share it with your friends and your network. And for tax saving tips, make sure to check out healandassociates.co.uk and sign up to our newsletter. That's it for this one, and I hope to see you on the next one.